please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then let's get chatting with our next management. We have Munjal Showa. That's the stock in focus right now on the back of a strong two-wheeler sales that we've seen in the month of March, with increasing demand resulting in a boost for the ancillary suppliers like Munjal Showa. To discuss that and more, we're joined by Mr. Yogesh Munjal, the Managing Director of the company. Hi, Mr. Munjal. Thanks so much for joining in. Well, it's been a while since we've got a chance to speak to you. So things are looking good, right, in the auto space on the whole. If you could just explain to us what portion of your revenues come in from Hero MotoCorp and who are the other big clients, with some breakup of how much they contribute to your revenues.
76% is from Hero MotoCorp.
Okay.
And Honda scooters is 8%, Honda car is 5%, Maruti is 6%, and others is 2.5%.
All right. But, Mr. Munjal, we have seen such a good growth in terms of sales volumes, and the auto space on the whole is looking so good. You are primarily, I think, into shock absorbers. What's happening there? We're not seeing any revenue growth from Munjal Showa in the last few years. If you could give us a sense.
Last year, this year, 31st March closing, we have a growth of around 8%.
8% for the year?
Yeah.
All right. So quarter 4 would be very good because I'm looking at your 9 months.
Last quarter is very good.
So last quarter is looking very good. Quarter 4 numbers are looking phenomenal because for 9 months, you're more or less flattish. So quarter 4 would give you that boost.
No, but now we have an annual growth of 8%.
Okay.
Okay. So this is annual growth for calendar year 17, or you're talking about expected growth for FY18, which is an April to March quarter?
Yeah, April to March, this is expected growth.
Expected growth. And will this kind of high single-digit growth sustain into FY19?
Yeah, we are expecting similar growth in the next year also.
Okay. Could you tell us what has changed? Because in FY17, the company's sales declined. So is it purely on account of an improvement in demand that, sales will pick up in FY18? Or has the company increased its capacity, it's won new clients? What has changed?
Demand has increased. Also, we have done some improvements in cost, quality, and delivery, and therefore we are getting more business.
Okay, all right. So things looking good then on that front. What about margins, sir? You have been doing around 6.5%. Various input costs as well have been going up. You're expecting to hold on to these levels?
Margin, I won't be able to tell you now because.
But 6.5%, can you hold on there, or is there going to be some deterioration?
Yeah, we can hold.
Okay. So earlier in your client list, you had Bajaj Auto, but now when I look at the website, we can't see Bajaj Auto there.
No, Bajaj Auto was right in the beginning in 1980s only. After that, Bajaj Auto is not there. Bajaj Auto is competitor of Hero, so they don't buy from us.
All right. And in terms of your, the business that's coming in from Hero MotoCorp, has it been reducing, or has it? I mean, are they holding on to the business that they have been giving you? There's no change over there.
They are giving maximum business to us, but they have started one second source also for a limited quality. So that they are limiting to that. Others increase they are giving to us.
Okay.
Okay. All right. Thanks so much, sir, for joining in and giving us all those details. All the best for the remainder of this year. And in fact, in FY19 in particular, we'll see whether or not there is some growth that can come about.
Nice of you.
But let's move on. Then we have Mr. Murthy, the Executive VP Finance of NCC, who joins us. Remember, this is on the back of the orders that we have seen in March 2018. Mr. Murthy, thanks so much, sir, for joining in. If you could detail that for us, what was the total order inflow in March 2018, and what's your current order book?
You see, in the month of March, we received 1,085 crores of orders. There are actually 4 orders. One order of 344 crores in the Water and Environment Division, and 3 orders of 741 crores in the Electrical Division. For the year as a whole, FY18, we received fresh orders of 24,523 crores. As far as the order book is concerned, I cannot tell you because the execution numbers are yet to be received by us for the month of March. But the order book at the end of the year should be somewhere around 31,000 to 32,000 crores.
Okay. These would be record order inflows of 24,500 as well as the opening backlog. Would these be the highest the company has ever seen?
Yes, absolutely. This is the best ever as far as NCC is concerned. The previous year we got an order accretion of about 14,000 crores, but this year has been pretty good for us. With that, the book-to-bill ratio also has improved nicely, around 2.5 to 3:1.
Okay.
That is also a good visibility for the next 3 years as far as the order execution is concerned.
Okay, so visibility is good then, Mr. Murthy. Great. But break up this order book for us. I remember in the past you were telling us you're looking at affordable housing projects. You were telling us that Bharatmala, you're hopeful to hear from, orders coming in from there before the end of FY19. Give us a sense of break up the order book and tell us what are the likely orders to come about.
The orders that we have received pertain affordable housing. We got good orders in the state of Andhra Pradesh. Then we have got some road projects also, and also some water and environment projects in various states. We have got a healthy order book comprising of buildings, water pipelines, and roads. Roads has improved nicely, and they have a share of almost 13.5% in the order book of the company. So these three verticals together constitute about 80 to 85% of the order book as well as the top line of the company. And we have a leadership position in all the three verticals. So it is augurs well for us as we go forward.
So with record order inflows, a very high order backlog, what would FY19 revenues look like? And have you won these orders at better margins, or is there a lot of competition which could hurt your margins as you execute?
Yeah, to answer the first question, our board is meeting to finalize the business plan for FY19 in the fourth week of April 2018 in this month. Then only I will be able to tell you the expected top line as far as FY19 is concerned. And the orders that we received are coming with better margins. Okay. We are looking at gross margin of around 16% and EBITDA margin of about 10 to 10.5%.
For FY19?
Yes.
All right, Mr. Murthy, if you could tell us, what are your working capital requirements? You have a good order book, you have visibility for the next 3 years. What's your balance sheet looking like?
The balance sheet has improved nicely. We have done a QIP of 550 crores in February 2018, just 1 month back. Those funds are available for us, and they will be utilized for the top line growth, the working capital required for achieving the top line growth that we are contemplating. So we are comfortably placed as far as the debt equity is concerned. Funds wise, we are comfortably placed, and we believe here is a beginning of a growth phase for the company, and next 2-3 years also should be good for the company as we go forward.
Okay, Mr. Murthy, we'll leave it at that. Thanks so much for joining us. As you can see on your ticker, the market has turned negative and focus on Hang Seng. Now, that has taken a turn for the worse, currently lower by 450 points. Let's get the intraday up for you on the screen of Hang Seng. The rest of the Asian markets too are looking quite weak. Korean market still down about 1.5%. Straits has lost close to about 1%. The Chinese markets were holding up marginally in the green when we started the show, now dipped into the red, a cut of close to about 0.2%. And even the European markets, as we earlier pointed out, have started trade mildly lower. So the DAX is down close to about 0.25%. Pharmaceutical sector seems to be dragging its feet. So Lupin has slipped 1.5% from the high point of the day. Cipla too is currently in the red. Sun Pharma is down nearly about 0.5%. So these are some of the drags in the last 30 minutes or so. But let's move on and get chatting with another corporate. Growth in F519 is expected to be better than F518. That's the word coming in from Godrej Group Chairman Adi Godrej. In an exclusive chat with CNBC TV 18's Priya Sheth, he also says that the group may miss the 2020 revenue target that it had set for itself.
It will be a good year. Although being an election, a year just before election, there might be some political issues that might come in the way. But generally the economy has picked up well. And we think from an economic point of view, growth will be much better in 19 than it was in 18.
You know, you laid out a vision of target of about $10 billion for the group by 2020. And you had said last time when we spoke that you may perhaps miss the target because of the kind of changes that have been taking place in the industry. Are you still standing by that? What would be the new target that you've set?
Yeah, I think mainly because when we set the target, inflation rates in India were quite high. So it took into account projected inflation. But inflation has come down a lot. Global inflation is also quite low. So that's the only reason, because today if you see the growth in many companies, it's a little lower than it used to be in earlier days, because earlier there would be, say, 10% growth because of business and another 5-7% because of inflation. Now that inflation percentage is coming down.
So when do you see the Godrej Group hitting a 10 billion sort of target? Is there a year that you...
We don't want to predict it because of the difficulty of predicting inflation.
Then markets are trading more or less flattish, moved mildly in the red, but as promised, shifting focus to the commodity space. Manisha Gupta joins us in the studio. Manisha.
Thank you so much for that, Nigel. I know you've done so much of sugar already, but that really is the talking point right now. With the sugar prices down 16% in the season, while the FRP has gone up by 11%, those problems for the sugar as an industry just do not go over. And, while we, of course, are looking at ISMA's number at 29.5 million tons, the industry is putting out a number above 30 million tons as well. So I think the problems when it comes to sugar is, for the time being, here to stay. You can't export because the international prices are at a 2.5-year lows, and you can't keep it in the Indian markets because that would just about continue to depress the prices even further. Dharmesh Bhatia as well joins in to voice in those concerns. Dharmesh, what is your sense? How do you look at the sugar prices from here on?
Hi, Manisha. Definitely, I'm expecting the sugar to continue to be weak further. There's two reasons. Internationally, still the supply is really high. Price is really trading at 2.5 years low. It's trading at 12.50, 12.60. I'm expecting the market to head towards $12. I'm talking about sugar 11 world. And in domestic market, if you have noticed, the price already crashed 1,000 rupees from almost within the span of 6 to 7 months. I'm expecting this fall to be continued, and if the rainfall is really good, you can expect the sugar price heading rock bottom towards around maybe around 2,800 to 2,700 rupees mark. So for short to medium term, I'm still bearish. I will suggest that hedgers to definitely to go short internationally in case if they hold sugar in physical strong. I'm expecting the price to go further down.
Dharmesh, also, how are you looking at the crude oil prices? Because we have seen some pressure come back in for that too. Yesterday, New York was a good session, but Asia, Europe hasn't been able to hold on to those little bit of gains that we saw. Is it a sell coming in for the crude oil prices also for the day?
Definitely, the volatility is really high in energy pack just because of the world war, or maybe the war of words, or maybe geopolitical tension. Rather than fundamentally, there is enough supply in the market. If you see the shell production is really high, it's just that rig count is a little lower. But on the other hand, Russia is producing really high. Saudi Arabia is really trying its level best to cut down the production so that the price will be stable. But I don't think so. The market will continue to hold at this level. You can expect the market to reach $60, and in domestic market, coming days you can see with rupee appreciating, price will go way below 4,000. To short to medium term, market will be in bearish zone. June, July is the hurricane season. That time you can see some kind of volatility. But on an average, I would go short.
Dharmesh, we spoke about sugar and we spoke about crude. I want to put the two of them together because there have been some reports suggesting that India, from cane, instead of producing more sugar for the next season, which is also expected to be on the higher side, should perhaps take the ethanol way, which Brazil has been doing. And that in some sense could also be putting some pressure on crude. Do you see that scenario in any sense working out?
See, India imports really high. Basically the trade deficit of India is basically gold and energy pack. But ethanol definitely would give some kind of support to the trade deficit side. But on an average, internationally, we don't manipulate price. So on average, I'm expecting the energy pack to be completely depend on the Saudi or MENA region and the US continent. So that's the two things will drive the international price. But domestic market, ethanol will tamper the environment. So I don't think the market will support that level.
Okay. All right. Thanks so much for that, Manisha. Well, on that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.